Hi, my name is Colin McCluskey, and this is my presentation on how a progressive tax will help reduce income inequality in the United States. The current problem is that income inequality is on the rise in the US. Over the course of this decade, the income for the top 1% has risen far more than the income for the middle and lower class. The graph to the right shows these changes in income. My infographic talks about this issue and how income inequality has changed since the 1980s. The income for the upper class has increased more than 3 times the amount than it has increased for the middle class. This is unacceptable. The Gini coefficient shows us where the US ranks compared to other countries regarding income inequality. Thanks to their progressive tax plan, Germany ranks number 1. For the US to move to the left on this chart, we must begin reducing the income gap that we have created. The current policy that the US has in place is the Tax Cuts and Jobs Act of 2017. It focused on reducing taxes for businesses and individuals. This policy was created by the Trump administration in an effort to stimulate investment and job growth. Has this policy reduced income inequality? The short answer is no. This policy has done the opposite of reducing the income inequality problem. A person in the bottom 10% would average a $50 tax cut. Alternatively, a person in the top 1% gets a $34,000 tax cut. This has only made the income inequality gap worse. My solution is a more progressive tax plan. A more progressive tax plan will have a direct effect on reducing income inequality. This will result with more money in the middle class, leading to more spending and a better economy. Income inequality has a major effect on the labor market. More income inequality leads to lower wages and less jobs available to the working class. Jobs then become monopolized by the rich in order for them to save money on their employees. Reduced income inequality improves GDP and boosts the economy due to more money being in the middle class. Income inequality has effect on a labor demand. By reducing income inequality, we can shift labor demand to the right on the graph. This will lead to a higher wage rate, and more people looking for jobs in the market. Income inequality also affects labor supply. Similarly, supply will move to the right due to businesses wanting to take advantage of the booming economy. Businesses will want to invest more, and this will lead to more people being hired for work, resulting in more high-paying jobs. Lower income inequality will reduce unemployment. With more demand for jobs, unemployment will decrease due to more job opportunities being available to the public. It is important to note that there has to be some natural rate of unemployment due to other factors like frictional employment. This is healthy for the economy and should not be looked at as a bad thing. A lower income inequality leads to higher wages. Due to more competition between firms to hire workers, the working class will be able to ask for higher wages. This will lead to a better economy as the middle class will have more money to spend and they will lessen the gap on income inequality. These higher wages will lead to more labor productivity. As morale surrounding the economy continues to grow, so will morale in the workplace. There is also an economic benefit due to less income inequality. A more progressive tax policy will simultaneously increase the amount of money that is in the middle class while reducing the amount that is at the top 1%. This will help spread the wealth and increase our Gini coefficient. There will be an increase in aggregate demand. More money in the middle class means more consumer spending, which means an increase in aggregate demand, and this will lead to a higher level of output. Because of this, there will be more investment. As more people are spending money, businesses will look to invest more as the economy gets better and better. An increase in business investment will also lead to a higher GDP. This will also lead to more social programs. With more tax revenue, this will give the government more of an opportunity to spend money on social programs like welfare. This will lead to a better society in America and higher GDP as there is an increase in spending by the government. A progressive system is the most fair way to tax people as it lessens the burden on the poor. Since the poor have the smallest disposable income, a progressive tax allows them to keep more of their money. While it may seem unfair to tax the rich more, they have the disposable income to afford it. Unfortunately, the current pandemic makes this plan hard to complete, as the economy is in turmoil now and a larger tax is not the best way to solve it. Before the effects of the tax kick in, consumers would lose money, making the already low consumer spending even worse. For right now, it is best to hold off and let the government pass policies to get us past this recession. Once the economy begins to grow again, and once the unemployment rate starts to decrease, this will be the perfect time to begin passing a progressive tax plan. Unfortunately, the current administration will most likely not be in favor of this plan. It is important to vote in the 2020 election to make sure that leaders who support progressive taxes get elected into office.